Good morning, everyone. So I just request all the panels to come in and share the companies and the names. Yoann Turpin, the co-founder of Wintermute. Yeah, it's good. All of has come. Yeah, it's better to. So it's always good to introduce yourself and to talk about your company rather than the moderator getting into that. Yeah. So I would request all of you to tell about your company, what you do, and specific how you guys are into this business. So starting for you, Fluffy.
Yeah, so Yoann, co-founder of Wintermute. We started 7 years ago now. We've grown to become the largest spot crypto market maker. So we do about 15% of the global markets in crypto. We're based in Singapore and in London. We invest also, so we have about $200 million deployed across the crypto space, across 100 teams. And we started incubating about 2 years ago, so a few teams, so 3-4 teams to date. So very happy to be here.
Thank you. Yeah.
Cool. Hey everyone, my name is Chinan. I'm a partner at Saison Capital, where I lead Web3 and digital asset investments. Saison Capital is a corporate venture capital firm that is backed by Credit Saison, which is one of the largest credit card companies in Japan.
Mm-hmm.
So my name is Sam. I'm managing director of Krungsri Finnovate, which is the corporate venture capital under Krungsri arm. So Krungsri is under Mitsubishi Financial Group from Japan. So we are in the same country. And basically, so I'm running the investment arm.
Mm-hmm.
We have been investing for 25 startups, and yes, including 3 from Web3. And the other hand, I'm running the innovation lab at the bank called Stella. So we are creating and finding the new innovation to the Krungsri groups. Thank you.
Okay. Hi, my name's Kaweewut. I'm the head of R&D innovation lab at SEABW.
Hi everyone, my name is Yanshan. I'm the head of APAC at Figment. So Figment is the largest non-custodial staking provider in the world right now by the amount of assets that stake on our platform. And so partners and clients work with us because of our focus on safety, security, and also our expertise in the protocols that we support. And right now, in Thailand, we see that, there's a lot of opportunities for institutions out there, especially in terms of blockchain, and which brings us to a topic today. Yeah.
Interesting. So today we have gathered here to talk about the role of institutions in the future of finance. So how the institutions are playing the ball game and how they are leveraging their status in terms of handling the finance in terms of in the crypto base. And here we're going to talk about the trends and the strategies of institutional investment in the blockchain and crypto assets. So I would start asking Yanshan about what you are seeing in terms of trends which is shaping the institutional investment in blockchain and the crypto assets.
Yeah, this is a great question. I think if you look back at 2023 in terms of investment in the crypto and blockchain space, it's more akin to an ice cold pot of water, right?
Mm-hmm.
Think about it. And then when you fast forward now to 2024, and Q1 specifically, it's the time when you see bubbles are starting to form when the water is starting to boil. And more specifically, in terms of numbers, we see that in Q1 2024, around 2.5 billion of capital has been raised for blockchain and crypto-related investments, which is around 25% increase if you compare it to Q4 2023. But what specifically these institutions and VCs are investing in, what I'm seeing right now is a lot on DeFi, especially on chains like Solana, on any other POS chains as well. I'm seeing SocialFi. I'm seeing restaking, right? Restaking is a topic that's come up, especially with EigenLayer and other AVS, actively validated services that's running on top of them. And of course, anything that has to do with BTC Layer 2 and ZK Sync is red hot right now, right? So these are what I'm seeing specifically. And if you look at specific investments in infrastructure, we see that, just a few weeks ago, we saw that Monad raised $225 million from Paradigm. And, AVSs like Espresso, protocols like, alike, raised around 60 million from A16Z as well. So, this is what I'm seeing in the space, but I'm sure you guys are looking at different things and happy to share perspectives.
Yeah. Kevin, your thought on this?
Yeah, I think as a financial institutions, I think when we look at it at the whole spectrum, like not just in the DeFi, but we're starting from what's been, low-hanging fruit where we can serve our customers, So you can starting from, the custody part of it, right? And then you can going to the exchange, the brokers, and then you can talk about the DeFi and the thing that is non-regulated. And for us, I think what we are very keen to explore is not on the infrastructures like the chain or even at the lending right now, but on the kind of in the middle part, on the wallet, right? Because we think that this is the areas where we use the technologies to customize for our customers. For example, like account abstraction and all those, and those are the areas that we are actually exploring right now with Shard Lab. So those are pretty much, I think, for the financial institution, I think we are look at the whole spectrums, but the way it will be different.
Mm-hmm.
Yeah.
So in terms of crypto assets, so what is your thought on that?
The crypto assets, right? So we say crypto assets, right? There's a number of those, right? Like a real world assets, and also like a crypto, right? So for us, we have an investment arm called SEABW2024, right? So they are actually the one who's looking at this crypto asset. But at the end of the day, investing in the asset itself is we have to talk to the regulators a lot. So now we're focusing on the infrastructure part first, but on the asset itself, we're talking to the SEC and all those, and I think the regulations is being ramping up very fast. So those are pretty much like a second priority.
Okay, Sam, you want to put a light on that?
Yeah, since we are from the Thai bank, the same similar approach on the investment, and with the regulation, we cannot investing in the crypto space from the institutional. However, I think from Thailand perspective, I think we are, as you know, that we are very fast moving on the regulation on the digital asset. I think from this year, I think we will see a lot of the asset-backed tokenization. We see a lot of projects coming out and releasing a lot of projects now to see many real estate are coming on the asset tokenization. So as well as we look forward to seeing the fund tokenization on the mutual funds, on the closed-end fund. So that's why we invested in one of the portfolio in Singapore called ADDX or ADDX. So they are doing the asset tokenization on the closed-end fund. We will see that this will be happening in Southeast Asia very soon, where normally you cannot liquidate the asset till the maturity date. But now with this technology, you are able to do on this one. So we will see a lot, not just only ADDX, but many platforms are doing on this one in different continents now. So this is part of the trends here.
Okay. Kenan, I would like you to talk about the trends and also about the tokenization, as you was mentioning, yeah?
Yeah, I think tokenization, it's kind of a key theme, right? And also for us as an institutional-backed venture fund. And I think that's really because it's the easiest thing to understand, right? It's hard to kind of explain how even Uniswap or how these things work to let's say the institutional stakeholders sometimes. But when we help them to understand the benefits of tokenizing assets, right? Increasing inclusion, expanding access, reducing sort of admin and all these settlement costs, I think people get it very quickly. The benefits are clear, and I genuinely believe it's sort of the first strong use case for blockchain in the financial world, right? And so I think because of that, there's a huge concerted push that we're seeing that. And even for us, we are so actively sort of investing and deploying liquidity into some of these companies. And sort of also to build on what Yanshan said, another trend we're seeing, it's, with all of these increasing L1, L2s coming out, there's also a lot of primitives, right, that can be built on top of it. And I think that's also what excites us, because if you miss the seed round of, right, your monad, your mental, then the next best thing is the seed round of like the DEX or the borrow lend protocol on top.
Yoann, talk about your company, like how it's seeing the recent trends, and in terms of tokenization, where does it stand there?
So the trends that we see, some of them we interact more with than others. So let's say there's like three main things. There's there's a big narrative around AI these days, or AI meeting crypto. We've seen more like very obviously on the institutional side the ETF trend, and then I would say RWA, where RWA was more prominent in a dialogue where we needed yield, because more in the winter, and then as soon as things fly up, no one cares about yield.
Yeah.
So RWA just, the RWA narrative just faded a bit away. AI still remains a very fluffy narrative, because it's actually, if you know anything about AI, it's actually very difficult to go and get the amount of compute that you need to generally do AI with the blockchain. But there's very, very good valid narratives around AI, around all the ZKs and the obfuscation, and generally doing AI with essentially maintaining privacy of data. So there's a lot of good blockchain applications which are less about computing, but more about, wrapping and, doing a social network essentially that would protect your data and doesn't necessarily, force you to give all your data to nearly say money. It's kind of the same, but all your money to Facebook. But also I wanted to bounce back on like something that affects our business quite a bit in a good and a bad way, is that institutionalization of the space through ETF, for example, is just very good in terms of getting third-party validation. Essentially, so we want in the crypto space, we want some third-party validation from all the people who were not necessarily buying into the space before. And then we've got someone like Larry Fink at BlackRock, who basically talks a lot about tokenization and explains it in a very good way, where essentially he's really explaining that, well, okay, BTC is fast, but essentially it's all about being future-proof as an institution, because even if you don't believe in a BTC and a crypto in itself, you need to have some part of the business that understands how tokenization works. So, because if tomorrow equities get tokenized, then all these asset managers, all these banks and so on need to be future-proof essentially. So that's part of that's the good part of the narrative. I think one part that's a bit frustrating for many of us in the crypto space is that a lot of banks still have a lot of trouble just supporting Web3 businesses per se. So there's still like this Web 2.5 as such. There's not enough fluidity. And then I think as a business itself, like we still see the US dollar in crypto being so much more expensive to borrow than US dollar in traditional finance. So I think you still have some of these disconnects, but that's the only downside. And I think it's really, really progressed over especially the last year or so. So mostly positives as such. In terms of investing, we see some of the deep in projects also decentralized infrastructure essentially project taking off on the AI side. We do a lot being careful around regulation, around essentially excluding US most of the time, but a lot of yielding stablecoins as such. So Mountain and many of the others. Yes, at the end of the day, it's quite positive, because it just means there's more bigger brains around the table to help the industry improve. So that's all good.
Yeah, I'm sure with the banking aspect, Sam would agree what you mentioned, and it seems like you have a depth knowledge about it when it comes to institutions. So I'll bring the second question to you. Like, how do institutions adjust their strategies to seize opportunities now? The area is vast, the market is vast. So how do they adjust the strategies in terms of seizing the opportunities in the blockchain and the crypto market?
So usually you go through like institutions tend to just go through other allocators as such, or the funds as such. So through it starts as, with the ones who take more risk. So essentially the VCs. Starts with VCs, and then they go to more liquid strategies.
Okay.
And beyond that, it's the ones who can't touch crypto will just have to go through derivatives essentially. So we started to cover the CME from the end of last year. So we can help institutions who trade on the CME to get essentially exposure to Bitcoin at this stage. So it's a bit of like the ones who can't touch crypto basically will just have to go through derivatives, right?
Yeah.
And that's the two main trends really. It's not, they haven't necessarily adapted. Some institutions that are quite savvy have been doing some DeFi. I mean, we've met even 2+ years ago. I was meeting Swiss banks that would actually deploy funds on DeFi, and some of them for good reasons, like DeFi, because they can just recall the contract, they can recall the whatever funds they lend actually quite fluidly. That's more the exception than the rule, sadly.
Okay.
So I think it's more about, if you think of from an institution point of view, it's like, what can you get through an investment committee? that may need to take time to just started to understand Bitcoin and start to maybe slowly understand Ethereum and the more all the other concepts that we in the space barely have the time to catch up with.
Yeah.
So I think there's an education layer to go through, and then there's what their own regulators just let them do as well. But it's progressing quite positively.
Yeah, and as you mentioned about Bitcoin and Ethereum, like everything looks so illusionary when they're rising and they're falling. So it depends all the companies how they're strategizing. Or so like, what is your thought on this? What would be your idea of strategizing, looking at the opportunities which is in the market?
Yeah, I think really for institutions, it starts with courage, right? Like there's always more reasons why one shouldn't, especially one that it's regulated, one that has a long-standing brand and reputation to uphold. But I think it really comes from sort of the softer factors of, like someone or some few people having the courage to take the first step forward, right? And I think sort of to what Yoann mentioned, there's many progressive layers of participation in Web3. I think often people think that the most immediate thing is, I need to buy Bitcoin, I need to buy Ethereum, and that's the only way you participate. But that couldn't be further from the truth, right? There's just so many ways and means to experience the benefit of the blockchain without even necessarily having to participate in the markets, in the trading parts of it, right? So for example, testing out, deploying a private permission blockchain, just to understand how the technology works, that in itself could be something that's done, right? And there's nothing to do with sort of crypto out there. So I think it really comes from individuals within the organization having that courage to take the first step and figuring out what's possible instead of adopting what I call the lazy thinking way of like, okay, Web3 equals to Bitcoin, Ethereum, I need to buy, and if it crashes 50%, I'm going to lose my job. Yeah.
Okay, Sam, from your industry perspective.
So what happened now, I think what I see the perspective, the strategies in strategy, what most of the institution, especially the bank in Thailand or security companies now, I think we see a lot of the coming up on the asset management side.
Okay.
I have been hearing that many mutual fund houses are waiting for our SEC to approve the ETF. Similar, so basically it's mutual fund investing in ETF out of Thailand, mainly on Bitcoin ETF. So there will be a lot in Thailand this will be open the opportunities for those retail investor or ultra high net worth investors to be starting investing into the Bitcoin ETF in the easier way, right? So that will be happening. For in Thailand, we see a lot of the asset management and a few asset management that are regulated by the Security Exchange of Commission (SEC) doing on the crypto asset management right now. So this is a kind of opportunity in this year that people come. Maybe a lot of people are. Some of them are concerned that the Bitcoin is the price is maybe too high already, whether they should invest it or not. So better to give to the professional to be handling on this one. So this will be happen in this year for in Thailand where we see most of the retail investors starting to invest in here.
So I think this year is going. It's not only Thailand. This year is going to be very prospective for a lot of other regions and countries when you see the crypto space. Now, I'll move to my next question and we'll talk about the regulations. So it's a hot topic. Everybody's talking about regulations. You would talk about US, how Hong Kong has approved. So, Yanshan, I would like you to answer. How do evolving regulations affect the institutional investment decisions in the blockchain and in the crypto assets?
Well, in my world, I'm a staking service provider, right? Staking service providers aren't exactly regulated, but it's more of the partners that we work with that are regulated, right? And many a times, it also depends on the regions, right? So certain, just so to understand a little bit more on protocol staking. So essentially, that is when institutional investors they invest in POS or proof of stake ecosystems. Sometimes they get tokens as a return, right? And they will use it as economic collateral to lock it up in the protocol as so as to secure the consensus mechanism that it operates on, right? Essentially, that's protocol staking. And of course, they get some rewards out of it. But what is important here is that it is entirely non-custodial, and there is no third party, generally speaking, there's no third party involved other than the blockchain protocol itself, which has to exert some form of control over the economic collateral so that they can enforce the rules, right, to keep the blockchain secure. This is protocol staking. Now, it is very easy to bundle this together with other forms of investment vehicles, such as, you can be borrowing, lending, DeFi, liquidity pools, if you do not do a deep dive enough. And I think many regulators are taking good steps in this area. So, for example, if you take the Thai government, right? I think previously back in 2022, they did a blanket ban, right? Correct me if I'm wrong. I think they did a blanket ban for staking and lending. But fast forward to last year, they actually did an amendment to say that, okay, if it's protocol staking, but for securing the consensus, then that could be allowed, depending on whether you follow the SEC rules, right? So I think this is a very positive development in terms of the government understanding technologies that exist on blockchain. And even for Singapore, right, the MAS has been consulting with blockchain community here in Singapore, and of course Figment is heavily participating in it. They after the evaluation, they decided to limit the risk for retail and accept that institutional and accredited investors will need to participate in that. So I think all these developments are good. So the question of is evolving regulations crucial? I think it is. But what is even more crucial is that the regulators have to understand what they are regulating, right? Because if they do so, not only will it limit risk, but it will also not hamper innovation and growth in the blockchain space.
Okay, that's interesting aspect. Kaweewut, your thought focusing Thailand, how it is trending and as a global perspective?
Yeah, I think for regulators part, I want to go back a little bit that regulators in Thailand is very progressive. They've been experimenting a number of things like during the past 5 to 6 years. Like I think we are one of the first country doing the stablecoin Intanon kind of things. And at the time, SCB actually invest in Ripple like 2016, right? I think that the issue here is that we should jump a little bit, we do experiment, but when it comes to scale, right? That's the hard part. It's come to getting it online, right? And when you have this cycle of have a bull run and then a bearish, so it's like we want to go further, but we keep coming back, right? It's that, but I think the thing is how much we pull back, right? Right now, I just feel like the balance is there. We pull back a little bit on the last winter. So I just feel like experimentation mindset is there in the regulators. I think probably in Singapore, in Thailand, there's a lot of smart people doing the projects, writing the papers on that. But when it's come to POC, it's okay. But when you going in the sandbox and getting it out of the sandbox, those are when it becomes like tricky, when you have this up and down market, right? Because people start to fear when this come to winter. I think this timing is very significant because all the industry think it's going to go, right? So now regulators try to catch up. I think that's dialogue needs to be like, very closely, communicated on the opportunities and also how we ring fence the risk, right? If you're looking at the organization in SCB, right? Before we are like a bank doing everything in the bank, right? So we 2 years ago, we're doing a reorg. We have like a parent company. We ring fence the risks in the bank. And then we do have SCB10X doing investing. At the time, it seems like it works out because, we don't do anything with your deposit, right? So we have money to invest in all those. So in the same time, the industries need to evolve themselves in terms of the organization, how you ring fence the risks and all those, and discuss that innovative way to experiment things for the regulators so they don't freak out too much in terms of when some things go wrong, right? It's definitely gonna go wrong, right? When you're doing a new thing. So you have to kind of demonstrate to them the effort to try experiment thing. But to me, the key here is how to get it from experiment into the production. That's the hardest part.
Yeah. So Sam, as you mentioned, regulators are moving in direction like if you want to have a big jump, so you have to step back 2 steps so that it'll be a great thought process when you're moving or deciding something in terms of regulation. So what is your idea on this? Like how the regulators are really helping moving into the institutional assets or really hindering?
Yeah, supporting from Kun Kaweewut. I said, I would say that I haven't seen the SECs doing this great job. I mean, in a couple of years, I think we see how they could adapt into the current market practice. That they see that how they going to support. Just only one thing that in Thailand they are not allowed for the crypto to use as a mean of payment.
Okay.
So I truly understand because I am halfly from the central bank. I mean, we are under the regulation of the bank because we are quite worried about the stability of the Thai baht, right? I would say that if we allow, it will be happen in a few weeks that you can accept crypto exchange everywhere in Thailand. It can do easily in Thailand. You can deploy and everything. And whenever we cannot control the usage of the new generation of people, and then Thai baht has suffers when it was in 1997, right? Yeah. When it was a depreciation halfly that time during we call Tom Yum Kung disease. So I think the Bank of Thailand would like to save a bit, save size a bit. They don't want the crypto exchange, the crypto asset to be mean of payment. However, they still do support for the stable coin to be exchanged. But right now, they might open for the retail CBDC first, but they did pilot. I think we are the two banks, right? SEB and Krungsri. We are the first two banks to do the pilot already since last year. But the project will be, I think, restarting soon to make it more out of the sandbox now. So we already passed the sandbox already and are waiting to be used in the real case on the CBDC. And maybe in the future, if everything settles, stablecoin maybe can coming on this way. So that part, that not just the SEC but the Bank of Thailand itself, they are fully supporting to see the happening of the digital asset. They would like to see less coin or less notes, right? They don't want to keep printing the notes, where it's costly to the country. Right now you see that there are less ATM in the before. There are less users of ATM in Thailand. People using prompt pay, if it's possible. But in the future, you don't have to print any notes come out. You don't have to print any coin.
Yeah. So in terms of like digitization, the banking industry needs to have a more regulatory form, and when it comes to digitization of the currency or the money, and in terms of global regulation, I think the banking system or the bankers or the bank organizations, they need to be more stringent, as you mentioned. Yeah. What is your thought on this? How do you see this aspect of regulations?
Yeah, I think, to be honest, sometimes regulation can be an inconvenience, right? Like let's not kid ourselves. But at the same time, I think it really sets the safeguards for both the mass retail, like basically our parents, our friends who are not in crypto yet to come in, as well as for institutions to participate. So do I think it's necessary? Absolutely. Do I think it's inconvenient? I also do think it's very inconvenient, right? For us, the ultimate shareholder being a Tokyo Stock Exchange listed company, it took us 15 months, right? Because they were like, no Cayman, no BVI, none of those entities that, let's say, have a mixed reputation at the very least. We want you guys to be incorporated in Singapore. We want you to be audited by a Big Four. I mean, just goes to show the thinking that's required, right? So I think absolutely for us to move forward on this, I think it's much needed. And I would say this is really sort of like the coming of age, right? Like, once again, we just need to think back 15 years ago, and I see a lot of parallels with social media, right? 15 years ago, Facebook, Instagram were things for teenagers to post embarrassing photos, right? Businesses were afraid of, what if people can post nasty things on my page? But today, no one asks a business or organization, hey, do you have a social media presence? Like, it's a given, right?
Yeah.
So I think that's really sort of the evolution that will come, and part of that is, of course, regulation supporting it.
So Yoann, give us a global perspective, like how this evolving regulations have centralized and how they have actually helped in terms of institutional investments.
I mean, the other thing is so walking everyone through like a world map as such, but then let's say that people are still very, very careful with the US and especially the US continent in general. There's more clarity in Europe with MiCA. more and more clarity and a lot of localized geographies in Asia between, Yanshan mentioned Singapore. Hong Kong has made good progress, even if it seems like a limited set. Like there's clarity, but through the limited scope, limited number of tokens as such. They've been quite quick, approving these ETFs. We'll see when that really starts trading. But it was announced, I think, just early last week. After this, just Japan is pretty clear.
Yeah.
Japan had a good experience with FTX because they had some set of regulations ahead of MTGOX or post MTGOX that basically forced the FTX to actually just essentially collateralize.
Hong Kong also. Yeah.
Hong Kong also.
Yeah.
So these people just had essentially good experience with FTX and were able to just move on a lot faster. So there's now pretty clear Web3 regulations in Japan. Indonesia, moving essentially the crypto regulation to the SEC equivalent.
Yeah.
Through the OJK, probably mispronounce it. But essentially the banking regulator is now going to regulate crypto. And all this is more like Thailand. I'm just discovering as such, so I don't know the space well enough. So it's really good that we've got at least 2 experts here. But yeah, we're just trying to discover the landscape as such. On with some hurdles. I mean, like Yanshan mentioned the staking as such, but staking and as it comes into like the space of custody very quickly, and then you have more and more countries like Indonesia, like Australia, like Japan, and so on, where essentially as soon as you do provide some form of custody, then you end up having to put like $5, $10, $15 million on the side just in case. I was hearing, I think. Tommy mentioned, or ADEX was mentioned, I think. So all these the RWA plays, as soon as actually in the US, if they get SEC approved, then you suddenly need to do fractionalized art or something like this. You suddenly need to put $10 million on the side just to make sure that if something happens to one of your customers or the artwork, then actually you can compensate them. So that's giving a lot of guarantees to people, which is good. It makes things more attractive as such, and it helps new entrants to come into the space.
And more safe also.
So more stable, but also it adds a lot of friction to a lot of innovation as well. So there's pros and cons, as Chin was mentioning.
Okay, so let's talk about the custodial services. Like, how are the custodial services are changing to meet the institutional investors' needs in the crypto asset industry? Yeah, you are.
So some of them are adapted, especially to ETFs. Coinbase actually won quite a lot of the US ETF landscape as such. Bullish, I think, winning about crossing one of them. It's interesting to see if we end up with an ecosystem that looks more and more like traditional finance. So when we started, it was actually a big part of my role as a co-founder of Wintermute. There was no prime brokerage, and there's still very little prime brokerage into the space. So prime brokerage essentially is 2 functions. It's lending, borrowing, and it's getting access to exchanges.
Okay.
So access to exchanges, a lot of people in crypto are now used to just have it just plugged in and just do the piping themselves. Now the lending, borrowing is still very dysfunctional. People tried it through like a previous phase until 2022, and we all remember what happened in 2022. A lot of these lending, borrowing platforms folded, and that still needs to be rebuilt. So there's DeFi plays around this. So we incubated a team called Wildcat, for example, that does essentially bilateral, on-chain, but it's ultimately KYC, bilateral lending. And these things don't scale that well. One of the reasons is probably because, the US dollar, like the TradFi US dollar just became a lot more expensive, over the last 2+ years. So there's a bit of a trade-off for people who want to, have the opportunity to both invest in TradFi and in crypto as well. But in general, it's just quite difficult to get access to lending, borrowing. So I think the evolution, the institutionalization, if you want, of the custody players will be, I think, around just becoming this prime brokerage sort of play. So you see, Hidden Roads is probably one of the ones that is most likely to become there.
All right, so we'll just quickly move on this aspect as we're running short of time. Kin, what is your thought? A quick break.
Yeah, I think my take is that for custodians, ultimately it's going to be a multi-winner market, right? I think if anything, the past 2 years ago, whatever that happened has reminded us of not to put all of our eggs in a basket. But I think more importantly, what I'm excited to see, it's how the insurance and basically the ancillary services around custodians continues to develop. I think that's going to be, I think to Yoann's point, right, important to be able to secure large amounts of assets under custody.
Sam, talking about the banking sectors. Yeah.
Regarding to the custodian, actually, we don't need it now because mostly like the ETF, we are doing the fund of fund, so we don't carry on the digital asset yet. But we are thinking and preparing in the very near future that we could be one of the custodian for our high net worth customers. That when right now the crypto exchange is back it again, right? So I think lots of our customers now are keep investing on the digital asset. Maybe they have a lot of coins, the Bitcoins, and then they would like to, the most safe and trusted for them is the banks. So we usually have to have a vault to save for them, but we are thinking to preparing for how to keep their digital asset under the bank and charging the fees for them, right? So this is the part that we are preparing on this one.
Kaweewut, yeah, your thought?
Yeah. So we're not looking into it at banking perspective.
Yeah.
As a financial technologies groups like XCBX, 2 years ago we do a joint ventures with 5blocks, and then we spun it out like a technology company, right? So
Yeah.
but we believe that infrastructure need to be there in the futures. So I think that's the most important part. You get started, right? And then you don't look at it like, oh, whether your customer in Thailand is ready or not, right? But you know that in the futures, and we actually registered this company in Singapore. So basically, you had that, and then you learn it from the global players there, and you look at the technologies with our partners. So at that time, it's all about security, it's about technologies. Right now, it's all about yields. It's all about diversification, right? And I agree that that's not going to be, not everyone's going to put all the money into one custody, right? So it's all about partnerships right now. It's just technology quite yet, like how you partners with financial institutions, right? Because financial institutions need to diversify themselves. It's pretty much more on the commercial side right now,
Okay.
and getting to know the ecosystem. So technologies is still important, but on the commercial side, you need to know everyone in the ecosystem. So that's very important.
That's very important. Yeah, Yoann, custodial services. Yeah.
I actually agree, right, with Kaweewut, what he said, it's about the commercial side. And of course, sorry. And of course, what Tianan said, that custody is a lot about ancillary services right now. And as a staking service provider, we don't do custody at all, right? Protocol staking is non-custodial, as I mentioned.
Yeah.
So we work with a whole bunch of custodians, a whole range of institutional grade custodians, and we have seen a lot of things in this space. And so there's a lot of factors, but in the interest of time, I'll just focus on one, which is what we talked about. So especially on chain support, right? Like, does the custodian, can they move fast enough to support the new chains that are up and coming that institutional investors need, right? And can they have those ancillary services like staking, trading, participation in the broader ecosystem rather than just paying the custody fee, right? Holding the assets there. So that's one. And of course, there are a host of other factors as you expect in any business from my experience, like ease of use, right? Can you whip out, like when you're using the custody service, when you're on the flight, can you whip out your phone and manage your assets as you go? A seamless platform where you can stake and trade with a few clicks of a button, simple things like that. It's actually affecting the choice for these institutional investors, right? So this is what I'm seeing right now in the space. So if you guys have any other comments.
So as you said, it does have challenges and it does have benefits. I'll just wrap up a final quick question and each of your point talking about the macroeconomic factors which are actually impacting the institutional allocation in blockchain and crypto assets. Would you like to give a note?
I used to trade macro, as I used to trade interest rates as such, and there's some central bankers there. And I still blame the central bankers for keeping me away from crypto, believing in Super Mario Draghi and the likes. Macro is always helpful to our space. I mean, it's pretty obvious that it was really helpful in 2020, just with all the balance sheet, the state balance sheet money printing, the start the bro. And then you just end up with quite a lot of money that needs to find space and needs to find yield. And essentially, it was super helpful to the space early 2020, and probably helped a lot for the bull run of 2021. Now, obviously, we've seen the competition between higher yields, and and a DeFi summer that happened in 2020, but that wouldn't have happened a few years later. So the competition with yield is interesting. Now it led to new innovation with obviously like yield, yielding stable coins and a few things are just trying to bridge that gap between TradFi and the crypto space. It's a good question. I think it's more a big theme has been about institutionalization of the space, and as you get institutionalization of the space, you get a financialization of all these assets. And basically, what ends up happening is that if the equity market goes down, and you have a fund that holds some crypto and some equities, they'll probably start to sell a bit of crypto and everything correlates. Yeah. So you end up with a case like 2008 where I say being diversified is not super useful because everything goes down together. It's still very useful for people because to invest in crypto because the space is still very, very small compared to I think we're comparing the Nvidia. It's gone back down a bit since, but the Nvidia market cap was about, I think, it's probably still about 2 trillion. And our space is just about 2.5 trillion. So that shares that macro has an influence, but then the space is still so tiny that it doesn't have so much influence. But yeah, the interest rate is a big thing, and it's I think it's stabilized. Other factors, I don't see many of them. We've seen war factors or war or lack of clarity on in the Middle East, impacting the market. I used to think it would be positive for prices, and nowadays I think it, again going back to like everything being a bit more financialized, everything correlating together. I think people just tend to be more cautious. But yeah, we'll see how that pans out.
Okay, Ken, the macroeconomic factors and
so I think very quickly, kind of similar to what Yoann shared, right? I think for me it's more of a thinking point that I want to put out there. It's will Bitcoin ever become sort of the digital gold, right? Because if people have said it's supposed to be, but it's quite far from that now, right? When markets go down, Bitcoin and everything else goes down. So would it be an asset class that continues to stay correlated with the macro or starts to become further away? I think that will be interesting for us to see where the space moves towards.
Sam,
so we have done the research and announced by our head of wealth at the banks, and since then during before the crypto winter, but until now I think our head of wealth announced that the asset allocation with the digital asset, especially with the Bitcoin, Ethereum, they recommend to invest, but should not be more than 10% of your total portfolios. So I still believe and trust on this digital asset. We will see that there could be the digital goal in the future. So I recommend that even that's why after this recommendation, I think all the asset management now are willing to offer this product to customers in order to let the customer keep investing in this product. Yeah.
So the two bankers are sitting next to next. So what is your view on the macroeconomic sector there?
I think in the bank we always predict, right? But and at the end of the day, I don't think as you're working on the innovation function, you're not sure if you have to rely on the prediction at the whole time, right? Because it can come out wrong and right. So I think the key is you'd have to stay relevant to whatever scenarios, right? So for us, I think on one hand, right, you know that this is the bull market, it is gonna pick up, right? But there will be a war, there will be something like that you cannot forecast, right? But you have to stay relevant. So on one hand, financial institutions need to keep experimenting on what's going to be relevant in the future. So on the other hand, you need to keep educating the regulators on what's going on, right? I think those are two parts that you need to stay balanced, stay relevant for whatever scenarios that's going to come out. But to me, as a macroeconomics, right, I see it's like a positive right now. Yeah.
Yanshan, your thought on this last one, yeah.
Yep, I agree. Like there's a whole host of macroeconomic factors out there, but I just want to zone in, I think, on what Yoann briefly mentioned as well on interest rates, right? I think when we talk about the impact on crypto markets, we would see that interest rates always come to the forefront. But if you were, I was a FX specialist previously at Deutsche Bank, so I had done some of my own research and even done my own statistical analysis that if you look at in general over the long period of time, interest rates and the crypto index actually do not have a statistical significance correlation, right? But if you look at money supply, and specifically M2 money supply, you see that it has a correlation of 0.75 with the crypto index from a specific period of 2017 to 2023, if my memory serves me correct. Right. So that I'm not a statistician, but 0.75 is quite a high number, right? So
It is actually a great point.
so liquidity and is essentially what is driving the market, and I think that's what institutional investors should be looking at to decide allocation, right? Of course, there are a whole host of other factors, but I think this is a leading economic indicator, even for crypto.
All right. Thank you very much, guys. It was a really great panel talk. We covered a lot of aspects when we mentioned about the macroeconomy. We spoken about the banking sectors, the Eastern region, and of course, US and UK, how the regulations are also coming. So thank you very much, guys. It was wonderful talking to you. Yeah. Thank you. Thank you. Thank you.